Good morning and welcome to Economy and Markets on BusinessDay TV, where we give you a comprehensive breakdown of happenings in the economy as well as in the markets. This morning we're going to be looking at something quite important. Last week was quite a week of releases for our banks. We're talking about their first half 2025 releases across the board. Last week plus the week preceding that, we saw UBA, Zenith, Stanbic dropped their release, as well as GTCO. GTCO Holdings released their financial statements. I'll be looking through. This is in addition to Wema that had initially released months ago, as well as Sterling Bank, Sterling Holdco that had released. When you look at some of the financial statements, you discover that we are looking at it's quite a discovery. It's quite a discovery from what we had in H1 of 2025. So for example, we see gross earnings for GT Bank fall just marginally. However, when it comes to net profit, we see net profit drop significantly by over 50%. We saw their net income from H1 2024. In H1 2024, they had a net income of 906 billion naira. However, in H1 2025, we see their net income drop by 449 billion. This situation is not unique to GTCO. We see similar situation in Zenith Bank. We saw their net income for H1 move from 577.9 billion, approximately 577.9 billion in H1 2024. In H1 2025, we see that 531.8 billion, just around an 8% decline. Their gross earnings actually grew. It went up by over 20% it went up by about this is around 20-30%. This is for Zenith Bank. We see the same situation, but for some of the smaller banks it was not the same. In actuality, overall we would say there's been an end to the massive FX gains that we've been seeing from 2023 coming to 2024. On the other hand, we'll say, okay, interest rates are still high, so it's counting for something. But when you look at all of this now begin to pay attention to dividends. And looking at all of this is what we've come to discuss starting the show this morning. And on the show, I have Dr. Kingsley Ayozie, who is a chartered accountant as well as a public affairs enthusiast. He talks on economic matters. Good morning and welcome to the show, Dr. Kingsley.
Morning, Mr. David. How are you today?
I'm well. And you?
I'm doing well.
Okay. So would like to start off. Let's look at the.
I don't know. Can you hear me?
Yes, I can hear you. I can hear you. I can hear you quite well.
Okay.
So let's start off. Let's look at when you look at across the banks, will you say that the banking sector met or did it meet, did it exceed, or did it fall analysts or investors or market expectations? Did it fall short of market expectations or did it exceed it?
Well, if you allow me to respond to that, I would say that there is a mixed feeling. Mixed feeling in the sense that to some, it was a positive step in the right direction, but to some others, they didn't move up the ladder, so to say. So some had a good ride. Some banks, well, it wasn't really okay for them. But I've taken a closer look at what were really the challenges that made those banks not to actually perform well as expected. Some of the reasons I was able to gather has to do with the fact that the rate of inflation have not been too friendly. So there is the issue of inflationary pressure on the macroeconomic variables. Apart from that, too, I was able to also ascertain that the issue of statutory costs, especially the levy collectible by AMCON also affected those banks that were not able to do well. Then the environment too have also not been friendly. Is it when you fit well that you want to do banking transactions? So all of these things contributed to those that did not do well. Then on the part of the high-performing banks, my study revealed that these banks did well because of the high growth rate in the interest income. So they actually got their earnings or performance based on the high growth rate in interest income. Apart from that, too, studies revealed that fee income also rose. So those are the issues. Like I said, to some is a win, to some is a lose. For those that saw themselves winning, it is because of the high growth rate in interest income and the high growth rate in fee income. But for those that did not really do well, the major reason was attributable to the issue of statutory costs, levies fees by AMCON, and the issue of inflationary pressure on the macroeconomic variables. So that's the way I want to look at that particular issue at this moment, David.
So now when you talk about high interest income for those that did well, you're talking about high interest income. We're currently in a position where we would say we saw a rate cut happen last week. We'll probably see more rate cuts happen over the coming months. What do you think? How do you think banks should angle to maybe prevent themselves from being at the receiving end of such drop in interest rates?
I didn't get that question well. Can you rewind a little bit?
So I said basically what I said was that last week we saw a rate cut happen. You spoke about the fact that high interest rates were very instrumental in some of the high performing banks. And I'm saying now that we are saying we're in a season of the CBN being dovish in a way, trying to cut rates and enhance production. So we'll probably be seeing a lot more rate cuts from November up until mid 2026. So what do you think? How do you think banks should angle to prevent themselves from being in a situation where their financials keep falling flat every year? Financials keep falling flat.
Okay, if I'm allowed to advise, I would say that banks generally should begin to look inwardly. Let them begin to look at other areas where they can also rake in revenue.
Okay.
They could also go. Pardon?
I'm listening to you. I'm with you, sir.
Okay. So they should look inwardly and ascertain other sources of income, because you will bear me witness that income of banks is not just only on interest and fee. There are other areas where bank can actually rake in revenue.
Yes, the non-interest.
So
okay.
Yeah, so they should go to non-interest collectibles. They should go in investments. Yes, can invest in real estate. You can invest in other worthwhile ventures that will be able to give returns at the end of the period. So the area of trying to concentrate your earnings or revenue purely on interest income and fee should begin to have a change and let them look elsewhere. They should begin to think outside the box, because that's the only way banks can actually stay afloat, especially now that the CBN is coming up with these stringent measures. So my advice is that they should look inwardly, think outside the box, and consolidate their earnings through other means, such as investment. Can also invest in assets that will be able to yield returns at the end of the period.
You are saying something. So you are saying something that is quite. I don't want to say unconventional. I would say uncommon, because I think that's a normal play in most parts of the world. But in Nigeria, we see a situation where our banks angle more with government securities AAA rated government securities and government bonds, they don't really play outside of the space. They don't really play. They are very risk averse in the way they do things. So how do you think they can merge this, your suggestion, with realities on the ground, where the banks are trying to be stable enough to ensure that they don't want anything to happen to their stability?
There is no saying that the banks need to think outside the box.
Yes.
That is the fact. If you must remain afloat in business, especially at this, permit me to use the word, turbulent times. So you need to diversify your base, diversify your earnings, and look at other areas. Yes, it may sound unconventional, but that is the way to go, if you allow me to advise them critically. So the issue of investment should not just be taken to the back street. Banks need to go into investment, invest in real estate, invest in assets that will be able to yield returns at the end of the period, because that is the only way they can conveniently compete favorably at this particular point in time.
Okay, so let me throw a question around their dividend policy. When you look at the dividend policy of our banks, especially for those who pay interim dividends, discover that some were quite exciting. For example, we see GT Bank paying. So for people who probably are not aware, GT Bank's interim dividend payout actually increased. When you look at the interim dividend payout ratio, it was actually a surge from what they had in the first half of 2024. So they increased from around 20 in the region of 20 plus billion to 36 billion, thereabout. The point is, the interim dividends of GT will say quite exciting. For Zenith, quite exciting. There was an increase in Zenith too. But for example, let's look at UBA, an 85% cut. What's your thought on that? What do you think? What do you think is the driving force behind an 85% cut in interim dividends from 2024 to 2025?
I want to believe that UBA probably is trying to, let me say, expand on their capital.
Okay.
The issue of probably they want to increase their capital.
But it's also coming. But we should pay attention to the fact that they did that interim dividend policy at a period where they were trying to raise money from a rights issue. It's also, what are your thoughts, basically?
So my thought is very simple. It's an avenue of trying to retain the earnings and apply it back into the business. So what good will it be to me if they pay something very higher and inwardly you are still having challenge? So why not do a cut of 80%, pay out 15%, and use the other one for growth and expansion in business, and also to maintain a healthy capital base. So that, to me, is the source of raising capital, though not going outside, but using your earnings, which will now be plowed back into the business for growth and expansion. So that's the way I want to look at it.
Okay. Let's look at I want to talk around GTCO's net income that fell by 50%, over 50%, from 1 trillion in H4, 905 billion in H1 of 2024, and it fell to 449 billion in H1 2025. Do you have any idea what triggered this kind of decline?
If you look at their financials, no doubt you'll be able to come to terms that part of the reasons, or some of the reasons that could have triggered that issue could be the issue of unrealized gain.
Okay.
Especially with recourse to foreign exchange earnings. So some of the figures reported in 2023 were not realized in the coming year. Apart from that too, I also want to look at it from the angle of regulatory pressure, which have earlier been mentioned. This regulatory pressure have a way of impacting on their overall performance. So the issue of unrealized gain, regulatory pressure, and let me use the word uncertainty in the economy could have been the reason behind this shortfall in their reported earnings.
Okay. Finally, one last question. A question is around the fact that when I'm looking through the financials of these our banks, I'm discovering that for some of them, they are increasing their loan books without the correspondent increase in their customer deposit. So what I mean is basically the customer to loans to customers is rising, outgrowing customer deposit. Is this a smart move, or what do you think? Is it something? Did you think it's a smart move? And let's not forget the fact that CBN has now dropped their CRR. That means banks will now have more liquidity to give out. What do you think about this? What's your thoughts on this?
Well, to banks, that may appear to be a smart move, but as a practitioner, to me, it's not a smart move. Why do I say so? Because over the period, that may lead to a cut in the interest rate. You know, when your books, so to say, is not agreeing with the loan given to depositors. So to banks, that's the short way or a shortcut of reporting earnings. But to us as practitioners, stakeholders, that does not really all go well. So if I'm advised, I would say that the bank should design a policy that will be able to favor the macroeconomic environment, especially the SMEs. They should inject more funds into the economy. Be rest assured that once the SMEs get adequate access to credit and they're able to put them into good use over the period, those entrepreneurs can also return back this money, and that will also help the bank to remain afloat. So this issue of trying to play ball and to me, it's not a welcome development. Yes, it may be a smart move at the short run, but at the long run, they will pay dearly for it. So my advice to them is to ensure that credit facilities are made available, especially for entrepreneurs and SMEs, and let there be close monitoring such that those funds will not be diverted into other use, except for the issue of production, job creation, and empowerment within the economy, because that's the only way the economy can remain boomed. And once the economy is booming, then you will rest assured that the banks will also smile at the long run. So it's a win-win thing. Let the banks design policies, promote SMEs, promote entrepreneurship. Then over time, this entrepreneurship will come back to say thank you. And saying thank you means that those money will be returned back, and the bank would have also made some kind of earnings or income from such a credit facility. So that's the way I want to look at that particular question and issue.
Okay, thank you so much, Dr. Kingsley Ayozie, for your time on BDTV. We appreciate you so much.
Thank you so much for having me. Always has been my pleasure being around with you and sharing my thoughts, especially on national issues that affect the economy, finance, and banking. Thank you so much once again.
Thank you. Have a lovely morning.
So you too. It's afternoon from here. Here is afternoon. So you have a wonderful afternoon from here.
Okay, so after the break, we return with some of the market insight as well as news making the rounds in the business world. Stay with us. Welcome back to Economy and Markets on BusinessDay TV, and we're going back with business news making the rounds. First things first. Dangote Refinery is resuming the sale of petrol in Naira. This is after a government intervention. Dangote Petroleum Refinery has resumed the sale of petrol, that's PMS, in Naira. This is barely a day after it suspended the initiative. In an email to its clients on Saturday, the refinery said the decision followed the intervention of the federal government, selling of all its crude oil. Days later, Dangote Refinery paused the sales of petrol in Naira, But on April 9, the federal government confirmed the continuation of the scheme beyond the first phase, which ended on March 31st, 2025. Then we'll move on to SEC. Nigeria's Security and Exchange Commission has raised alarm over some AI-generated investment scams. The Securities and Exchange Commission has warned Nigerians to beware of a rising wave of artificial intelligence-driven scams targeting unsuspecting investors with promises of guaranteed profits and fake celebrity endorsement. The Commission cited platforms such as CBEX, Silvercoin, and Tofro, which operated illegally by advertising AI-powered trading systems, offering unrealistic returns. These platforms are not registered or regulated by the SEC, yet they continue to mislead the public with false claims of AI-driven investments, the Commission stated. According to the SEC, fraudsters are increasingly using deepfake videos and AI-generated content to lure victims, sharing manipulated videos of politicians, celebrities, and TV hosts through Facebook ads, Instagram Reels, and Telegram groups. Scammers fabricate endorsements and testimonials to appear genuine, making traditional fraud detection less effective. To counter the threat, the SEC said it is deploying advanced surveillance systems for real-time detection and strengthening partnerships with the CBN and the Nigerian Financial Intelligence Unit for joint enforcement. Social media companies and influencers have been cautioned, with violators facing sanctions or prosecution. Then we'll move on to another story from Dangote Refinery, where PENGASSAN declared a nationwide strike over some of the sack of workers at Dangote Refinery. The Petroleum and Natural Gas Senior Staff Association of Nigeria, PENGASSAN, has directed its members nationwide to withdraw services in protest against the alleged unlawful dismissal of over 800 workers by Dangote refineries. The directive, issued on Saturday after an emergency National Executive Council meeting, accused the refinery of violating Nigerian labor laws, the Constitution, and international conventions by sacking employees for joining the association. PENGASSAN described the move as an attack on workers' rights and an affront to organized labor. The union also alleged unfair labor practices at the $20 billion facility, claiming more than 2,000 Indian nationals have been hired while Nigerians were sidelined or dismissed. It warned that no company is above the law and condemned the displacement of local staff, which it said left hundreds of families in hardship. The strike was meant to go effective from 6 a.m. on Sunday, the 28th of September. According to the release by PENGASSAN, they say members will halt control room, panel, and outfit operations with office workers to down tools from Monday. PENGASSAN vowed to maintain the strike until the sacked workers were reinstated. Now move on to Champion Breweries, that is targeting a 58 billion naira equity raise to finance the acquisition of Bullet. Champion Breweries is seeking to raise 58 billion naira through equity offerings to finance its planned acquisition of Bullet, the ready-to-drink energy brand. The equity component will be split between a 42 billion naira public offer and a 16 billion naira rights issue, giving both new and existing investors the opportunity to participate. This follows the company's August 20 announcement of plan to acquire Bullet's brand assets and intellectual property from Sunmark International. Bullet currently operates in 14 African countries, and this move will position Champion Breweries for an export market entry and stronger distribution leverage across the continent. Beyond this acquisition, part of the equity raise will support working capital needs. Champion Breweries has also announced plans of a 45 billion naira bond program with an initial 30 billion 5-year unsecured bond to fund capital expenditure, including new packaging lines, returnable packaging materials, and technology upgrades. The fundraising comes after a sterling half-year on the Nigerian exchange. The stock has gained 300% year-to-date, reporting a first half 2025 net income of 2.3 billion naira. This is about 692% year-on-year growth, with a revenue of 15.9 billion. Finally, United Capital has held a memorial for its 6 staff that was lost in the fire in Lagos. United Capital Group on Sunday hosted a memorial service in honor of 6 employees who lost their lives in the September 16 fire at Afriland Towers, the company's Lagos headquarters. The ceremony that was held at Harbour Point in Victoria Island brought together regulators, industry leaders, clients, partners, and members of the wider business community. The families and colleagues of the deceased joined in person, while live streams and additional viewing centers in Abuja and Port Harcourt enabled wider participation across the group. The group CEO, Peter Ashade, opened the service with a moment of silence and a moving tribute, calling personal memories of each of the deceased and offering words of comfort to their family. Tony Elumelu, CFR, who is the chairman of Harris Holding, also addressed the gathering with visible emotion, extending condolences and stressing the unity and resilience of the United Capital and Harris Holding family. Tribute from friends, families, and colleagues highlighted the lives and legacies of the departed before Pastor Itua Ighodalo delivered a message of hope and consolation. The service ended with a stirring performance by singer Timida Kolo, who left the hall in quiet reflection. United Capital stated that while the pain of their loss remains deep, their memories, impact, and contribution will live on in the hearts of all who knew them. And after the break, that's all we can take for business news. After the break, we return with updates from the market from last week, Friday. Stay with us.
They say money never sleeps. Wake up to clarity, insights, and the stories driving business in Nigeria and beyond. From the heartbeat of small and medium enterprises to the pulse of national economic policy, this is where business meets perspective. With expert guests, real-time analysis, and stories that matter to you. We go beyond headlines to bring you the full picture. Join us every morning as we break down the numbers, decode the policies, and spotlight the people shaping our economy. This is Business Money.
Welcome back, and we are returning with market updates from last week Friday, as well as last week, the weekend in September 26. On Friday, the market closed on a positive note as the all-share index reversed all of the losses of last week to gain 0.70% or 983.99 points, with the all-share index settling at 142,133 points. Basically, the gain of last week Friday brings the year-to-date return to an impressive 38.09%. In terms of market cap, we're seeing the market cap at 89.96 trillion naira, almost at 90 trillion naira. Will the market hit 100 trillion this year? Remains to be seen. On Friday, we also saw impressive trading volume with 518.7 million shares traded in deals worth around 18.05 billion naira. Top gainers for the day on Friday, we saw Thomas Wyatt, that's the paper company, lead with the maximum 10%. It rose to 3.33 naira 30 kobo on Friday. Unicell Interlinked PLC 9.98% to gain to close at 33 naira 60 kobo, and the Initiates PLC, the waste management company, also added 9.98% to close at 13 naira 22 kobo. The Initiate has been one of the most consistent performers on the NGX this year. The FTN Cocoa was also a significant performer, again 9.96% on Friday to close at the share price of 5 naira 96 kobo, and Omatech Ventures 8.57% gain to close at a share price that was 1 naira 14 kobo. Meanwhile, on the losers table, we see Fidelity Bank drop by a full 10% to close at a share price of 18 naira 45 kobo, while Custodian Investments shed 8.9% to hit a share price of 44 naira. Curtix PLC, the manufacturers of Curtix Cable, also shed 8.3% to close at a share price of 3 naira 20 kobo. Dark Communications down by 7.02% to close at a share price of 1 naira 6 kobo. Then Union Deacon Salt Maker down by 5.26% to hit a share price of 26 naira. In terms of activity on Friday, we saw our most active stock being Abe, most actively traded stock in terms of volume being Abe Mortgage Bank with over 50 million shares traded in deals worth over 340 million naira. Then Zenith Bank followed on the list with around 39 million shares traded in deals worth over 2.724 billion naira. They were followed in terms of volume. Stanbic followed Zenith. However, in terms of value, Stanbic was the most traded stock of the day. We saw 38.95 million Stanbic IBTC holding shares traded in deals worth over 4.17 billion naira. Then FCMB followed with 32.3 million shares in deals worth around 347 million naira, and Sovereign Insurance 27.26 million shares traded in deals worth just about 84 million naira. Then let's look at the weekly market report. During the week, despite a bearish movement in the market from Monday up until Thursday, the singular gain of Friday was able to wipe out all of the was able to balance out the effect of the bearish trade of Monday to Thursday. We see the market closing the entire week with a 0.2% gain, over 287% point gain from the week ending September 19. During the week, Thomas Wyatt, the top gainer of Friday, was also the top gainer of the week. It gained almost 23% points that week. Secure Electronic Technology gained over 20% points that week, to close at 91 kobo. Mikio was also a significant gainer. Mikio is trading at some impressive levels this year. Recall that Mikio listed on the exchange at 11 naira 50 kobo. Now it's trading at 26 naira 10 kobo. Listed on the last week, gained over 20%, over a fifth of its value last week. Keller Rams also 11.30% gain in the exchange to now trade at 16 naira 25 kobo. And Royal Exchange, after the news of its new management or the news of a new majority shareholder, we also saw that investors were quite pumped about that stock. 10.3% gain to hit a share price of 2 naira 25 kobo. In terms of losers of the week, led by Wema Bank. Wema Bank lost 12.41% to trade at the share price of 18 naira. However, it's still on triple-digit gains this year, despite the profit taking of last week. Fidelity Bank lost 11% of its share value last week to hit a share price of 18 naira 45 kobo. Etana PLC 10% loss rather, to hit a share price of 27 naira 90 kobo. Ikeja Hotels down 9.80% to hit a share price of 20 naira 70 kobo. And Africa Prudential down by 9.09% to hit a share price of 14 naira 50 kobo. And from the week, we look at on a sectoral basis: banking index, insurance index, consumer goods index, oil and gas index, industrial goods index. It was a mix across all sectors. The banking index saw a bullish run. However, on the insurance side, it was on the flip side. The insurance side lost almost a percentage point. Consumer goods also recorded significant gain last week, over 1% point. However, oil and gas continued the slump, and it's not far-fetched why oil and gas stocks have not gained a lot of favor with investors this year. 1.62% decline, and industrial goods 1.33% gain on industrial goods. Now let's close for the Nigerian market and look over at the US and the global market. On the global markets, and when you look at the US exchange on Friday, we saw a 65 basis point gain in the Dow Jones Index, as the US market is hyped up. Investors are hyped up about the US market. The S&P 500 index almost a 60 percentage point, 59 basis point gain basically, and Nasdaq Composite also 44 basis point gain. And on the flip side, in Asia, we saw on Friday the Asian market was very bearish. We saw significant declines in Korea, in Japan, and in Hong Kong. In Japan, we saw a 97 basis point decline. In Korea, it was a 2.45 percentage point decline, almost a 3% point decline. and in Hong Kong it was over 1.35 percentage points. Then we switch gears to Europe. In Europe, we track London, we track France, and we track Germany. On Friday, we saw all of these stocks follow suit with the US market. 77 basis point gain in the FTSE 100, 97 basis point gain in the CAC 40, and the DAX index we saw an 87 basis point gain. That's for Germany. The DAX index tracks the Munich Stock Exchange. Now let's look at the currency side. On the currency side of things, the Naira was up and up last week. We saw the Naira close at 1,486 Naira to the dollar on Friday, against the Euro 1,739 Naira to the Euros, and against the British Pounds 1,992 Naira to the British Pound. Some of the highest gains we've seen in the Naira this year. And that's all we can take on economy and markets on Business Day TV. I remain your host, David Olujinmi. Keep watching Business Day TV.